All right, ladies and gentlemen, I hope you had a wonderful day. It was a wild day in the markets. There was a lot of great plays. There was some terrible ones, a lot of hits and whiffs, my goodness, and a lot of surprises. And I was actually surprised that that's me. That people were surprised because literally the title of today's live stream was called The Trump Surprise. And we talked about the surprise yesterday. And then we got multiple surprises throughout the day. And really, a lot of things on the watch list yesterday came up. So I was kind of surprised by all of that. But when it was all said and done, today was a very stark reminder that you're not out of the woods just yet. You got to the 200-day. That is your yellow line besides your VWAP. We came right back down, kind of reminded of the volatility, and now you have two very big days ahead of you. You have GDP tomorrow, then you are going to be getting the PCE, and then I have a very big tech theory to go over with you. So maybe it happens like DeepSeek where 3 months later this ends up coming up, or maybe it happens sooner, but I want you to be aware of it. And now I'm going live for today. I'm even starting early. I couldn't hold this in. Even my schedule changed around a little bit, but I really want to share this theory with you. And yesterday's watch list covered a lot of things, not only for this week, but I think for the next couple of days and weeks. And really, I just got to give you an update on the tariffs, and then we could talk about this theory, and then we could go over some of these plays, because we got to start talking strategy. I'm going to tell you right now, okay? I have a pretty picture to show you, and I'm going to show you a very scary chart, but you shouldn't be scared. But what you should do is get ready, because things are going to get a little bit more challenging. If you thought the market and trading and dailies and options and anything else, if you thought that was difficult, it's about to get a little harder. Why do I say that? Because, my brother, we are really reflecting 2018 again. So now we were just a couple weeks ago looking like 2022. You remember the skew in the VIX and all of that? Well, you're also starting to look a little bit like 2018. And pretty much 2018, you had the VIX do something similar where you had a lot of this volatility, and it lasted for like 3 months, and then it pretty much ended in a crazy volatility spike. So I don't know. Some of you guys were there, but if you don't know what I'm talking about, like, pull back the chart. 2018, you had this uncertainty, you had a big drop, and then the blow off was like insane. So that means you got to be patient. This doesn't mean you should be worried right now, but this back and forth, the Trump chop, all of that, you got to really be ready for it. So we're going to go over that. We're going to go over the theory. Again, you guys are live right now, and you should have, I hope you watched yesterday's watch list. So again, we're live, youtube.com/stockmarket. I will see you there in the morning. Again, don't be surprised by the surprise when we tell you there's going to be a surprise, but also the watch list. So if you go to this today, right now, this video, it'll take you to this. But these factors that we talked about, they are all still in play. We're getting the event tomorrow. Again, where is it? Did I already skip ahead? No, PCE and GDP. That's what we're going to be getting here. So now all we got to talk about is what really happened today. So before I get into that, baby, what's going on? How you doing? Good evening. I didn't forget about it. Are you guys live? You hear me? I hope you hear me. I don't want to talk to myself. Oh, yo, what's going on, baby? How you doing, Tim? What up, pro? What up, Johnny? What up, Johnny Stallings? Open face. Oh, Gasconzo, Tyree, Ivy, Leo. I know. So I put it on this channel so it's easier for you to find yesterday's video. And then that way, too, I'm gonna pin this video. What up, Michael? How you doing? What up, Ryan? What up, B16? That sounds hard. Like, oh, Slade, baby. How you living, man? Good evening. So I hope you guys are locked and loaded and ready for it. We could go over some questions. Again, I'm excited, and we started early, man. That's it. I want to knock this out. There's some rumors going around. We have some theories that we need to talk about, but before we do that, to bring everything full circle from yesterday's watch list till now, we're going to get the big events tomorrow. GDP, and then Friday, remember, that quarter-end rebalance is going to be a pretty wild next 48 hours, but the surprise that we got today, it was copper and auto tariffs. So I don't know why everybody was caught off guard. Literally, Trump said, he's like, I have a surprise tomorrow. I got a surprise for you. And everybody seemingly ignored that. I don't know why, but we woke up this morning and pretty much they were saying that Trump is going to do tariffs on copper a lot sooner than people were expecting, in a matter of weeks instead of a matter of months. Think about even gold, and when people were doing that front run, that kind of ties into it. So that was the first surprise of the morning. But then as the day went on, that's what I'm saying. You got to watch yesterday's watch list because you had a double whammy of factors. So you had the copper stuff. We started to fade a little bit, and you were kind of selling off. It was a rotation. You literally had Dow and the staples up. We bought the staples right off the bat. That was a good move today. Execution was, but you were already kind of fading, doing this little rotation move, and then everyone kept talking about auto tariffs, and was like right around here, middle of the day, they started saying, or it was one of the European people, he got out of a meeting with Bessent and Trump and all of that, or I think Bessent, and he said they expect the tariff rate to be 25%. And that sent things going down. So why is that important? Do you guys want a pop quiz? Because I gave you a pop quiz in the morning, and that made you money, bro. If you answered the pop quiz, you made 300% in the morning today. So that's your pop quiz now. What was it? The guy at the European thing, he said he was talking about something. What caused the big reaction? Why? Why or what? Bro, do 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 do. Daily double. It looks like no Chads answered it. Oh, rates is kind of the answer. It was the tariff rates. So literally, the auto tariffs, everybody knew about it, but you had a reaction that really got things moving once we started getting a rumor of the rate. Had nothing to do with the industry or anything. It was all about 25%. And that's what we talked about on the watch list, where I was telling you these guys are going to start debating the rates. So that's it. You've already gone through the, is it bad or good? Is it inflation or not? Don't get left behind. You're going to start watching the market argue about tariffs, but it's not going to be what you think. They're arguing about the rates now and how it's going to affect people. So here's another pretty picture. And this is a survey of Deutsche Bank. And literally, it's asking these survey respondents and these bankers, where do you think the tariffs are going to be at? And you can see where 40-50% of respondents, they think you're going to kind of be around, 20% universal, 9% on China, essentially. Or 9% universal, 20% on China. So people are now debating the rates. This isn't about inflation. The inflation, especially after Powell, that's starting to get settled. I hope you guys are realizing this, because this is how we're going to start moving forward with it. But this is what I was telling you guys on the watch list yesterday. So now, what did we get from the auto tariffs today? It was mainly the auto tariffs. And even after hours, you got some reactions. Canada and EU already responded, and the rate was in fact 25%. And now Trump said no exceptions. He even said, I'll go easier on April. So he said he's going to go easier on April 2nd, but he said this is going to be a no exception type of thing. And what I was kind of expecting was that he was going to do the auto tariffs, and then in the next coming days, everyone was going to be like, well, it meets the USMCA, so it's not going to be that bad. Well, guess what? Actually, he even said the USMCA stuff, any non-American content, that is going to be still tariffed as well with no exception. So that's very important. Oh, I think DVR is on. That's why you guys are slow. Don't forget about that. So just in case. So yeah, I forgot. Yeah, maybe, because I'm like, wait a minute. You guys are even in the chat. Y'all saying random stuff or different parts. But that being said, the U.S. content and some of that stuff, that's not going to play out where it'll give you the positive view later, because he didn't budge, and he said he'll go easier on reciprocals, but he went hard on the EU. He's going hard on EU, Japan, and Mexico. It's a lot of money. It's $100 billion, I believe, projected. It's a big amount of goods. So him going hard on this is an escalation of some sort. So that's why we'll see what Liberation Day brings, but this got people a little bit off guard. He even said, Trump said he is trying to get a deduction for interest payments on U.S.-made car loans. So this one isn't as important. I just thought it was fun. But Trump is literally saying that if you get a loan on a car, an American-made car, you could write off the interest from your income tax. So, yeah, but all in all, we'll see how this all plays out. But for the most part, this might be more aggressive than April 2nd. We're going to find out, but when it's all said and done, this is adding to that choppiness of the trade. And now, again, I hope you've been watching the watch list, because what have we talked about? I even made UVXY plays. I told you, you should expect this. The week ahead of the tariffs, you get the rumor. Everyone gets excited. Then there's going to be a negative rumor. Today it was just the surprise and new info. And then we're going to do this one more time maybe in the next 48 hours, where you get positive, negative, and then by Tuesday or next Wednesday, we're going to meet somewhere in the middle. It doesn't have to be Thursday, Friday, because you still have Monday, Tuesday. So keep that in mind when it's all said and done. But now that we've gone over the update, giving you that idea with, tying it into yesterday and all of that, are you guys ready for this? I don't want to put this out into the universe, but I'm going to pin this video just in case. But are you ready for this? Are you guys ready for the next big tech crash? I don't know when, but I know how it'll kind of look. Are you interested in that info? Can I interest in you in that? I hope, will you not use it? Don't use this info against me. Don't hurt yourself with it. But like I'm saying, I don't know when, but I have a general idea of how it's going to look. So maybe we could watch out for it. Hypothetically, if I was a sailor, I would just say, watch out if you saw this amongst the clouds. And people are talking about it just a little bit. So here's the deal. How did we buy Meta at $90, Chad? Do you remember? And you guys could get long-term alerts. They're free. We post all the long-term plays. I was looking at the text message. I bought Meta and then I bought Redfin at $3. But that's another. But how did we get those? How did we get Meta at $90? How does a stock go from $400 down to $90 in a short amount of time? And how is it back at $600? How do you get that deal? I'm good. You guys are in the neighborhood. Fuck yeah. Excellent. Hell yeah. So a good thing happened to you and you understand it. I love it. Amen. No. It wasn't fear. You could kind of say, but it was spending. Yes. Amen. And it kind of bled through to everything else. So literally, that's the next thing, but now with AI. So I don't care what you think about AI. I don't even care if it ends up making profit. Hear me out. Back in 2022, financial conditions started tightening, and then a little bit later stage of the financial conditions tightening, you started now getting worried about a lot of these theories that people started going heavy on. Because you got to think about it. NVIDIA went down. We were going to buy NVIDIA. I didn't because I thought I'd get it cheaper. I thought we went one wave, we bought another wave, and we thought we were going to get it cheaper. So why didn't NVIDIA go down? Think about that. That wasn't AI spending. That had nothing to do at the time. Meta was doing spending on the metaverse. Why did they go down? Why did NVIDIA go down? Why did the chip makers go down? No, this narrative didn't come out, but it might play out like the DeepSeek one. Expensive money. Well, think about it. It was a lot of these theories or these kind of trends that everybody started putting money on. Why did people not buy chips? It wasn't because of Meta. It was because of Bitcoin. And then you had all the little crypto scams, tightened conditioning, and then, no more Doge, no more Elon Musk, Bitcoin, the wave was over. Think about it. And then the chip crisis and the supply chains. And then people were like, oh, we don't need to spend on that anymore. Again, Bitcoin had its pops and drops, and now still look at it. It's fine. So there was, again, Snap and all these other companies, they started going down from worries of supply chain, then again, the spending, the front running. But really, there was a big spend in tech, and then people started panicking after financial conditions panicked. That's going to be what's going to happen here if it happens. But this time, people are already talking about data centers and AI. So the Chinese have literally brought this up. That's what we heard yesterday. People have talked about this before, but now there's a new piece of info to it. But this could be like your deep seek. That's why I was saying this might happen in 3 months. Maybe this happens in 3 days, 3 weeks. I don't really know. It may not never happen, but there might be a time where essentially you start to get financial conditions tightening, and then people start to panic on the AI spend. Or if this uncertainty with everything else really starts hitting, what are people going to start doing? They're going to start kind of panicking. Again, Apple, Google, Amazon, and your boy Meta. Meta has the biggest. These guys are spending a lot. Even Tesla has a pretty big spend on AI. And then data centers, that's a whole nother area. I mean, go look. Oklo alone. Do you guys not realize it? Oklo is a SPAC. Do you realize Oklo is a data center? That is just a hype funding mechanism. I know that's a crude example, and I'm not wishing harm on it or anything, but this kind of highlights the point where people are literally, again, just like we've seen in the past, they're throwing a lot of money at something that doesn't really, like, they're just throwing money behind this idea of build out, build out, build out. No matter what the price, we're all going to make money. But eventually, after price goes up enough, that starts to backfire like all of the early inflation trades. You guys remember? I hope you do. So that's where I'm saying here, if we are going to get it, watch out for this. Some people are already talking about it, and that is what we got to kind of keep our eyes out for by maybe the end of the next earnings or next 2 quarters. Again, people are talking recession, first quarter, second quarter. If market wants to freak out, this might be the next part of it. And we'll talk about another piece of news that came out today, but that is key number 2. And finally, kind of relates to it, and this is just another factor that we brought up today, and I just want to bring you back. I want to make sure that you don't miss one part of the market that we've been talking about, and it's the market. And don't forget tantrums. The market is trying to get something out of all of this, you guys. And don't forget that people also use the market to get what they want. This is not that deep. Don't think this is some conspiracy theory. This is the idea of bond vigilantes, and people even debate that, but which came first? Just don't forget that, remember, there was Jerome Powell, then there's Donald Trump in policy, and then there's the market. So don't forget on these days or with the data or when it goes good news, bad news, good news, whatever it does, or whenever it decides to respond or ignore, sometimes that's the market trying to have its way. And don't forget, the market and pressure, that's what is a big, big deal. And if you don't believe me, this is where a lot of things are coming into play. I mean, this is why we have been talking about all these different factors, and then even, the macro and the global. I mean, literally, this chart, do you guys know what this is? So this is showing you the number of days since the start of the year and the performance of something. That right there is where you are right now, almost the best ever in history. Over for the last decade, 2 decades, even prior. Do you know what this is? Let me get the wire out the way. It's not the 10-year bond. Good guess, but no. It's not gold. It's not gold. I do have a gold chart for you. It's not value. It is eggs. No, I'm kidding. It's not eggs. Come on, think. I brought this up to you yesterday again. Big factor. Yesterday or the day before. Like I'm telling, like again, it sends a signal. Sign of the times. What's going on? What is this? What is this of? What's having the best days ever in history almost? As a result, and all of a sudden, we're doing bad. What trade just unwound? That's a good clue. Because that's not the answer, but it'll get you thinking. It's not China, mother. Ilang ma. No China. Made in China. It's not gold. It's not anything to do with Dragon Ball Z. No. Thank you. Truth. Truth XP. Brah. This, my friends, is Europe. Yeah. So again, I told you guys about Europe before this year even started. This is Europe. It's almost having its best start ever in history. So all of a sudden, the dollar unwinds, U.S. exceptionalist. That goes back in a month and a half. That blows up. And then now Europeans are having their best time in their effing life right now. Honestly, this is what I was telling you this a while ago. I was saying why, and I don't know, it kind of bothers me. So Don Lemon, anybody else that listens, or all of you guys all have influence. You should start being annoying about this. How come everybody freaks out about tariffs, but they don't say a damn word about $500 billion of brand new spending out of Germany, who hasn't spent money ever since the fucking Berlin Wall? Why don't you think that's going to cause inflation? I'm not worried about goods inflation. I'm worried about fiscal excess and spending. So why? This is again part of it. Think about it. They're stimulating. They're doing a lot. People are now going. They're like, oh, wait, never mind. The uncertainty. Again, people aren't scared. They're moving some of their money. You could sell U.S. equities, take good profit, don't need a hedge, and then buy the shit out of Europe. What do you think they did in the last 6 months? That's why I'm telling you, why does it look like 2022? But it's a different dynamic. That's why they don't need a hedge. They just sell and then buy Japan, Europe, and everywhere else. That was a beautiful trade. You see the idea here, though. But this is where I'm like, man, this is the market. This, in its own way, it's kind of a reverse tantrum, too. U.S. markets are saying, no, look, dollar. And then other markets are saying, look, see, in a weird way, you have our market kind of having a visceral reaction to, the pulling of stimulus and tightening and other things. Meanwhile, you have the other part of the world rewarding the fiscal excess in financial markets. So, point is, the market says a lot, and we've had there's a lot of things pulling apart. And just don't forget, sometimes when it makes sense or doesn't, this is the market plays a role, and it is saying something both domestically and all around. So keep that in mind as we move forward. So that being said, uncertainty is still high. I still have a little bit more to show you, but can I finish with one more chart? Would you guys like a pretty picture? Do you know what this is? Do you know what this chart is now? I'll give you last one. Do you know what this is? Look at this graph. Yeah. So this is your gold now. But what is it overlaid with? This one's kind of cool. You guys remember that global political uncertainty chart that I showed you? Yeah. So this is the Goldman Global Economic Uncertainty Index, now with gold. So I thought it was very fascinating that the VIX, because remember, I showed you this overlaid with the VIX. And that's why I was showing you be careful and be on watch, because you have volatility still at the lows. Meanwhile, uncertainty is again, oddly enough, I think this is very disingenuous, or a lot of it's manufactured. And that's why I'm saying watch out for this AI thing, because at the snap of a finger, just like they did in 2022, if the market wants to throw a tantrum, like, AI spend bubble, people will panic. And because, again, people are deciding to be more uncertain now than ever. Meanwhile, hard data has barely budged, and if not, has only gotten better, while the other soft data and more sentimental hasn't. And it doesn't mean we're not going to enter, an uncertain time, but I don't think, I think people's worry is a lot bigger than the actual boogeyman, if that makes sense. It's like, let me put it this way. It's like panicking about going to the doctor and like really freaking out, and you're like, oh my gosh, and then like, you're panicking, and then you even try to like run away from home to I don't know if you run away from home still, but to like get away from the doctor, and you're like, I don't want to go to the doctor. I'm terrified of the doctor. The doctor is a bad guy. He's going to hurt me. But like, you're going to see the chiropractor. Sorry, chiropractors. I still think you guys are doctors, but do you see what I'm saying? It's not like, I get it. Like, yeah, maybe, but like, bro, this is a chiropractor. Why are you freaking out? You're an eye doctor. Shut up. What are you saying? I fucking optometrist trying to instigate. He's trying to say, oh, he said, you see that? You get it? You see it? She has a pun for an eye doctor. All right, anyways. But yeah, so all in all, though, I think uncertainty is way overblown. But then again, it doesn't matter what I think, because like I'm telling you, if the market is going to throw a tantrum, I mean, that's it. That's your job, is to make money off of that. It's not to who gives a fuck what you think, respectfully, myself included. And that's why I'm saying, if uncertainty and other things, we got to figure out what's actually going with it. But this is going to set us up for a very interesting time. Be on the watch for both the bounce, or be on watch for the next, extension of things getting a lot worse. But on that note, Chatadonia, let us get into the plays. Oh, that's a horn. I hit the wrong one, but that's good. Amen. So here's the deal, baby. I got a good lesson for today. Today was weird because I did really good and bad at the same time. And it taught me something. Keep one and stick one. And you're going to hate this advice down the road, but let me start here, bro. I'm telling you, it's really about to get harder. Okay? If we get what happened in 2018, that means we got like another month and a half of uncertainty, and then you're going to blow off randomly out of nowhere, and it's going to be terrible. I'm telling you, this isn't good, you guys. I'm telling you right now that if you thought trading this environment was hard, it is only going to get harder from here. So either cash your chips, step away from the dailies for a little bit. I'm going to pin this video too. There's going to be no excuse. Or you actually lock in, have your strategy, have your ideas, adjust with it, but be ready. And again, if it doesn't go your way, don't force it. I promise you, if I could give you any general advice, not a recommendation, but just something to make you, no matter what happens to you, don't force shit in this environment. Okay? Very simple. So, you run that budget. If it don't work out, wait till you replenish. Don't force it. Don't be careful of your get back. Just let it amorphati on this run. If it works, it works. If it doesn't, do not try to force anything. Okay? Very simple. I think no matter what you end up deciding to do, I think that will help you. As long as the moment, because again, even today, I feel like I forced it. I said I was going to do things and I didn't even fucking do it. But, and like I'm saying, don't try to fit the screwdriver somewhere. You can't use a screwdriver. You're going to strip the wire, AKA your account. You know what I'm saying? So if it don't work, move on. I think that's going to help you out a lot. But this is where I messed up today because I had good plays. I hit puts right off the open. I even hit the sweet spot, literally buying tomorrow 5, 6, 8 puts for 40 or 30 cents. Go check the stream alert. Fire play. I even hit the 570 first, but I sold them too early. I even hit the 570, got enough to make it free, but I still sold too early, took my profit, right? Then I said, all right, I'm going to buy the shittier play. Got the sweet spot 568. Went up 60% to make it free. And then I was like, I'll hold this one till the end of the day. And I still sold it. And that play hit 1,000%. So I had and then guess what else I did? And this is where I gave you a pop quiz in the morning. I gave you guys a pop quiz in the morning. If you watch yesterday's watch list, thank God on the plays, we were talking rotation. And I was telling you, hey, be on the lookout for the staples. And we were saying if you notice it's the opposite of yesterday and tech goes down, we had bad NVIDIA news, be on the lookout for staples. So I hit the staples. I had Pepsi. We also I ended up doing Colgate. I hit on that one. But then you could have hit XLP. You could have hit Colgate, any of the staples. You had a 300%er. Why? Because I got 100%. I made it free. And I was like, I'll take it. Fucking, it goes up another 200%. So again, I executed way better 2 weeks ago on this trade. Good ideas, good plays. The price was right. I fucking whiffed it on the execution. So that was the problem, and kind of what I learned from it, or how I plan to correct this. I'm going to do what I did this morning, but I'm going to do it all at once. So I'm going to buy a high-quality play, then I'm going to buy a shitty play. And one of the shitty plays that's less money, I'm going to kind of hold it for more of the day. And then the other one, I'm going to buy one to scalp. But the problem is now I have to raise my risk. So we'll see how this plays out. Maybe I don't end up doing it. But beyond that, I just need to stick to, again, because I paper-handed what I said I was not going to do. I said I was going to hold it. I already had so many checks in place. I made a play, fucking flipped it, got profit. Then I got a good play, made it free, and I sold the free one. Why the fuck did I sell the free one? That's stupid. You see what I'm saying? I already was being safe enough, but that was just pointless. So I think that was a big mistake. I also made some calls. I'm not too worried about those. And now we could even talk, because I did buy NVIDIA calls for the dip. I bought it when NVIDIA was already down 5 because I like the individuals. But here's the deal. Meta in NVIDIA, I really like these plays moving forward. We already hit Amazon and a couple of other ones. I went long on NVIDIA. I like how it's moving. I just like the movement, bro. That's what I'm saying here. I'm not really committed to the upside. It doesn't have to go up. I don't really give a shit if it goes up or down. I might even flip out of these calls, go to a put, maybe play both at the same time. But what I'm saying here is that if this really was kind of a bull trap and, we do this big rotation again and then we run into problems and you don't get this rally here, then I think Meta and NVIDIA have a lot of downside. And then again, I think the next big downside, it's what I told you. I think Meta is the target, to be honest with you. Meta would have the most to lose. Meta and NVIDIA, if you watch a real souring of sentiment on spending in AI, Meta and NVIDIA have the most to lose. So if we do get short-term downside, I'm going to be looking at these two, and this is what I'm going to be eyeing tomorrow if we can't brush off this uncertainty and people don't like the developments that they got today. So that being said, I hope you enjoyed it all. I hope you're ready. What an interesting day. My UVXYs hit, so I made those free, but maybe I did that one too early again. But that is all that I have for you, Chattadonia. Is there any questions? I do have to go soon. I got about 12 more minutes. I got to go at 5:30 here. So if you have anything, now is your time. Watch list, plays, the Bible, not the Bible, my gym workout, my extremely big calves. Oh, dude, I fucked up at the gym today. But that's another one. I don't know. Can Trump single-handedly impose that tax deduction? No. You would need congressional approval. That one's bigger than Trump. That's a big deal. That's actually kind of wild. How auto tariffs make tech go down. It's just sentiment. That's why I'm saying here, like, if you guys don't understand my theory, and this is what I'm telling you, like, I have ideas, And I think I'm right about some things. But at the same time, like, who gives a shit what I think? And this is why I'm telling you the tantrums. And even now for this big tech idea, if the market wants to get more uncertain, like, to some degree, this is people shooting themselves in the foot. Do you get what I'm saying? I'm literally watching Fed members be like, oh, yeah, uncertainty is bad, and then proceedingly go on a world tour to tell everybody why they should be uncertain. It's a very odd time right now in terms of uncertainty, the messaging, and don't get it twisted. Do I believe that has to do with the media and how people are reporting on it? And do I think Europeans and other people are trying to get a leg up and get their way? I do. But it doesn't help that Donald Trump is random as hell and is just, swinging left and right too. That's part of it as well. I'm not singling anybody out. I'm just saying how this dynamic works, though. It creates this uncertainty, and at some point, again, if the market wants to say something, if they want to run with their own way, if they want to start freaking out, just like the DeepSeek, dude, DeepSeek was 3 months in advance. Remember that. You knew about DeepSeek in November, and then you reacted to it in January. So like I'm saying, even the tariffs, you just started unwinding this trade on the dollar in the last month and a half. So you see where I'm saying here, watch out for sentiment and narratives kind of developing, and that'll kind of, that leaves you with a wide range. So head on a swivel. No, intraday trading, you got to be quick. You got to kind of know how to read it. Like today, you got surprises. I also learned today, like I was going to take on the tariff news. I knew that news was fresh, but the plays were already up a lot, and I hesitated on new info. You would have doubled up on that too. So there's opportunities. You got to know what you're doing. You also got to be quick. You got to be nimble. But when it's all said and done, like I am saying here, it is only going to get harder. Some of you might want to just sit out for a month and a half, worst case, because if this plays out, like I'm telling you, I've lived through this already. I've won and I've lost. I don't say this, I've done both. I don't say this as a one-sided view. I mean, if it's been good to me, it's been bad to me. So when it's all said and done, though, if you play out like 2018, bro, it's going to be terrible. And right now, it is almost a carbon copy of 2018 in terms of the VIX. So that means you're going to have heightened uncertainty that just turns on and off for another month, and then right when you think it's over again, just like now, it's just going to ramp up and blow off top like you've never seen before. And that, right, my friend, is the problem, because you're going to get chopped the F up alive. I've seen it, bro. That's why when the trenches, y'all don't know the trenches. 2018 options, VIX in the Volmageddon, that was the real trenches. You got banks blowing up. You had hedge funds blowing up. I saw options traders, stock trade. It was brutal, bro. Because that's why I'm telling you, if you are tired now, if you think this is getting just like the philo, this is C.S. Lewis, bro. Don't get tricked by the demon. If you're just like, oh, this will be over soon. Oh, yeah, you're good. You're just beginning. Like, so if you're tired of this nonsense now, it is only going to escalate from here. That doesn't mean the market goes lower or it goes higher. I just mean you're going to get weirder premiums. You're going to get more chop back and forth, and it could end with a blow-off bottom or top. It could even end with a most hated rally, or it could just end with a final just take the bottom out, flash crash right when you load up on tech. So you got to be careful. And that's why, so what's best in this environment, if you have the right skills, the right info, and you're able to do it, there's some good trades out there, but it's only going to get harder from here. Long-term is the best strategy. Literally, finding value, using these opportunities to get your value. Again, not getting drawn into it, but that could help you out a lot. And that's why I said determine what you want with your cash, because you're either going to miss out on a little bit of gains, or you're going to be very happy if we chop around for 3 months and do a blowout in any way, because then you just stacked up cash and you'll probably get some better deals by then. So yes, head on a swivel, baby. You should be trained. You should be positioned. That's the thing. Not only trained, unfortunately, you should have the positioning. That's why. That's the beauty of it. I don't have to tell you words. I could show you. Your portfolio should have the position where this all makes sense. You know what I'm saying? Where whatever happens and whichever way we go, you should be in an area where you aren't losing or making too much in our, did they change fidelity? What is this? It looks different. Bro, am I tripping? It's a new chart. I think they updated it. Yeah, but this is a good position right now. I am not I'm not bothered by this at all. You know what I'm saying? Where is it? Yeah, bro. So year to date, even again, comparing it, doesn't it show you compared to all the other indexes? It should. But yeah, bro, I'm not bothered by it at all. But that's position. You should be in that position. If not, you either have too much cash or too little, and then depending on that situation, you probably went harder on something else. But that's what I'm saying. Your long term will win. I mean, please don't get it twisted, bro. You're going to get tricked if you don't realize that the long term is how you're really going to win. Because I'm telling you, from even 2018, 2019, I did very well. There was some awesome pickups. You know what I'm saying? So straight up, I hope you guys realize that. Because you could let everybody get chopped around, build up your cash. Now you're getting 4%. But then once you get these little gems, when the sentiment goes lower and people aren't really feeling it, you could be able to build up. And if you're not getting distracted by the quarterly volatility, you're going to really be able to aim for the longer term target. So I really do think building up, stacking up isn't a bad thing. That's a Uber Leap. Yeah, it's a covered call. We sold those. I've been rolling that one over for a while. Yeah, it says out there, view your performance. They had another one. They had like a chart where it showed you. They used to say it at the bottom. It would tell you the new experience. No, give me the old experience. Is this it? Yeah, where they would show it. Yeah, that's what I'm saying. Year to date, 10%, bro. I'll take it. Again, on some of these, S&P and everything's not bad. But that's why I'm saying you got to be careful, because then some people are like, oh, well, I'll get positioned now. But I'm like, no, look at Europe's already up a lot. China's already up a lot. It's different. It's not like this isn't something. This is the problem with what people keep doing, is that they're positioning later. So, and this is why I'm saying I think this is what Wall Street kind of did. I think Wall Street literally, they've just been selling off the top, and then they're buying Europe, and now it's too late. And now people are wanting to get in on it. Is it Schwab? I remember one of them shows you side by side with everything. But yeah, all right. Any final questions? Any final questions? I had UVXY calls, but I flipped them. No. Oh, yeah, they have all these. I hope you had a great day, baby. Tomorrow's data, GDP, it's going to be tricky, because if it's too hot, people might get worried about inflation, and then if it's too low, people will panic a little bit, but I think you could, any big miss or beat, is going to get tied to the tariff narrative. I'm not worried about Japan yet. Wait till those rates come down again. Yeah, look, this is us on the year. This is what I'm saying, positioning-wise, and it's not like we underperform. Look we beat, I think the only thing last year that beat us was it the SPY? NASDAQ got us by 5%, 4%. But then you outperformed the Dow and then the Russell by double. So look, we went with the market the whole last year. You get what I'm saying? That's a big deal because it's not like we underperformed. A lot of people who underperformed or who are outperforming now, they underperformed last year because they didn't have the shit. We still had a little bit. So we rode with the market in 24, and now the start of this year, look, it broke away. Now this is our portfolio in blue. Meanwhile, everything went down. But you don't get that by buying now. And this is what I'm saying. It's all about positioning in advance. So this is where you got to let your plan align. Don't be like this where you're getting late on it, and don't get it to the point where now you want to buy the value when it's high. That's not going to be the plan. And that's what I'm saying. Build up cash, wait for it, but you have to figure out where you're at. Again, depending on if you have too much or too little cash, then you work it out. But then this is why I'm telling you guys, every day they're like, are you there yet? Are we there yet? Are we buying this yet? Is this a diamond? Is this a diamond? Mine. Is this a diamond? Is this a diamond? Is this a diamond? Is this a diamond? Josh, is this a diamond? Is this a diamond? Is this a diamond? Is this a diamond? Hey, Josh, is it a diamond? Yeah. So look at what I'm showing you right now. MK Ultra phrase? Calm down. You think I'm at the CIA now? Because everybody asked me the same question? Well, but look, I need you to understand why I'm telling, if your portfolio looks like mine. If your portfolio looks different, this doesn't apply to you right now. But I need you to understand this. Okay? Very simple. Do you not see that you're in the lead? Why would you jeopardize that when you can collect 4% to get the best deal possible? Do you see what I'm saying? Because if you throw out new money, that's going to expose your portfolio a chance to underperform. So guess what? I would rather wait till this flips before I start doing it, because otherwise, why would I give up the lead or make it easier to lose the lead? It doesn't make sense. Why would I go out of my way to take on risk if I could get paid for no risk and our portfolio is already set up with the sizing and the types of plays where we have way more upside in this environment than downside? So why would I touch it? That's what I'm saying. Give me something high quality. I'll build up my cash. Worst case, all I do is add cash, and that's going to defend it even more. Because now with more cash, the value is going to go up, but it's not going to move. So now you're going to have, and then again, you're going to have more names that are already doing good. That's it. The names that are already doing bad, they're nothing relative to the size of the portfolio. But this is why I'm saying, why would you give that up? You're getting tricked by the sirens. You see what I'm saying? You're getting lured in by a not so discount. And that's why I'm like, it doesn't make sense if you have this when you have little cash, big outperformance. That would be like giving away your ticket in the front of the line for no reason. Everybody else scramble. You don't need to. Now mother effer's got to catch up. All you have to do is wait. And then if it catches up and you underperform, you will have a shit ton of money to buy whatever you want with more clarity now after everybody gets their little back and forth. Ta-da! A 5-hour lead, baby. So, Chattadonia, I will leave you with that. Get you a long-term. Thank you for your evening. I will see you in the morning. Oh, yeah, and if you guys need a house, because I had to miss Cole Real Estate. You know that? If you guys, who's buying a house this week? I'm getting at least this month. Let's go. Email me, and then sell me a house, you get a job. You find me when I buy, you get a job, baby. Otherwise, you better wake up early. Don't let me wake up before you. Yeah. So, Chad, I love you. God bless you. Thank you for your time. Don't forget why we're here, baby. Finger to the sky, okay? And you're blessed, bro. You know that? And, like, live life. And, like, dude, you're so unique, man. You are part of a very, very powerful race, okay? And that is called being a human. This is why you have love for humans. You know that? You know, don't let anybody trick you. Don't let the rhythm of daily lifestyle fool you into believing that you are ordinary, my brother and sister. Do you understand? For real. I'm being dead serious. I know I could do it. I'm telling you. Thank God I'm not doing a bunch of drugs because I would sound like a batshit loony. I'm saying this to you in this, bro, for real. What you can do and accomplish. I've seen it. I've done it. Bro, what you have at your disposal. Your power, your potential, my friends. That's all I'm saying. The history shows it. Like life, you don't think it's weird? You know that? You know what I was thinking about too? I told you, find me the art. Find me the art. Show me an animal that makes, we do things that animals do. Animals do things we do, but no animal draws another animal. And they said an elephant. That didn't happen in nature, naturally, you know. But you know what I was thinking about? This is what I want you to realize. Think about the elephant that knows how to paint. You thinking about the elephant, I'm thinking about the man. I'm thinking about the human that controlled this beast and got this fucking elephant to paint. You don't think that? And it still didn't occur naturally in nature. So, yeah. But, dude, think about it, bro. You could train a elephant. You could figure out anything. We already know so much. For real, bro. So I'm just saying, don't be fooled or don't be lulled into ordinary. Okay? So have a good night, baby. You're blessed. Realize that blessing when you lay on that pillow. Amen. 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 Have a wonderful evening. Finger to the sky, baby. To God be the glory. God willing, I'll see y'all in the morning. Have a wonderful evening and horn.